Today I'd like to explain a little bit about appraisal gap coverage. The first thing you need to understand is what an appraisal gap is. An appraisal gap is what you have when the agreed to purchase price for a home is different than what the appraised value is, and when that appraised value is lower. So how is an appraisal determined? The bank's appraiser goes out and looks at the property that you're buying and compares it with similar properties that have sold, as well as some that are under contract or are currently for sale. And through some art and science, they come up with an appraised value. So what happens when those numbers don't match? Well, understand that the bank is going to loan you, let's say 80%. A lot of people say, oh, I'm getting an 80% loan. What that means is that the bank is going to give you 80% of the value of the home. When you write an offer, the assumption is that the appraisal will come back at value, meaning that the appraised value and the purchase price will match. And if that happens, everything's fine. You're going to get 80% of what you agreed to pay in mortgage money, and you'll make up the other 20% in down payment cash. But when you have a low appraisal, that bank is giving you 80% of the appraised value. So when it's lower than what you've agreed to pay, there's a gap. If the contract didn't allow for the buyer to terminate the contract and get all of his deposit monies returned, then the buyer would be left having to cover whatever difference there were. And most buyers are not interested in that level of risk. So now let's look at how the appraisal looks to the seller and why the seller cares. Well, keep in mind that the price of a house is usually determined by those same comps that an appraiser looks at. When a house sells for more than that, if there are competing bids and the seller gets multiple offers and the price goes over list price, it becomes much more likely that that property is not going to appraise for what somebody agreed to pay for it. And sellers are not really interested in taking offers, even if they sound great, like they're way over asking, if that buyer is going to be able to terminate because of a low appraisal and walk away. And keep in mind, that appraisal needs to be only a penny less than the purchase price to allow a buyer to walk away. It could be $70,000 less, but if a buyer agrees to pay $620,000 for a property that appraises at $618,000, that buyer can walk away. So the seller wants to protect himself from that happening, particularly in a situation where there are multiple bids that are over asking, because again, that's when it's most likely that that property is not going to appraise. So one accepted solution to this problem is appraisal gap coverage. And that is when the buyer agrees to pay a certain amount of the gap in cash. Now, there are people who will waive the appraisal altogether, which of course is a seller's dream, and said, doesn't matter what it appraises at, I will pay any difference. Even if it appraises $100,000 less, no big deal. And of course, if that's the scenario, as a buyer, you have to be able to demonstrate that you have the cash to cover that difference. But in most cases, appraisal gap coverage is when a buyer writes into the contract, for example, I will cover up to $15,000 in appraisal gap. Here's what that means. Let's take an example. If someone has agreed to pay $700,000 for a property and give $15,000 in appraisal gap, that means that if the property appraises for $675,000, that buyer has automatically, and it can't be renegotiated at that point, agreed to pay the seller $690,000. That's up to the full 15 that the buyer was willing to offer, above the 675. Now, the seller doesn't have to take that 690. The seller can ask the buyer to come up more, but the buyer doesn't have to. But if the seller agrees to the 690, the buyer cannot terminate the deal. The buyer has already pre-agreed at the time of writing the contract to pay that $15,000 out of pocket above the appraised value. Let's say that property that someone agreed to pay $700,000 for appraises at $690. The buyer still has to pay the full $700,000 because they've agreed to pay up to $15,000 in coverage, but they never have to pay more than the agreed to purchase price. There are certainly some nuances to appraisal gap coverage, and you definitely want to be sure that you understand how it all works before you agree to provide appraisal gap coverage. So please definitely talk to your agent. But the most basic piece to understand is that when you write in the contract that you are willing to pay up to a certain number of dollars above a low appraisal, not to exceed purchase price, you need to assume worst case scenario, and you need to be prepared to pay that money. And understand that's completely above and separate from whatever down payment percentage or amount you were planning on paying. But in a very competitive situation, you want to have as many tools available to you as possible to make your offer as appealing as it can be to the seller, while not making it put you in a position that you are way beyond your comfort zone. So I hope that understanding a little bit more about appraisal gap coverage puts you in that position.